Hello everyone, welcome back to UPSC Warriors channel by Unacademy. This is Soundarya. Today we are going to learn a new term called as GDP, that is gross domestic product. So what is mean by GDP? We use that term to refer to the national income of the country. That is, in 1 year, how much amount of goods and services are getting produced in the country. So how do we refer the national income? We refer national income in terms of the monetary value of all these goods and services that we are producing in the country. Okay, so let's learn the definition of GDP now. GDP is nothing but the value of all final goods and services produced within the domestic territory of the country in 1 year. So what does it mean? We are calculating the value of all final goods. Say for example, if the country is producing cars, if the country is producing bikes, if the country is producing agricultural products, services, etc. So how much amount of goods and services we were able to generate in 1 year of time period is getting measured in terms of its value. Okay, so when we say value, what is the price of the car that you produced? What is the price of the bike that you produced? What is the price of the total agricultural products? So that is something that is indicating the value here, right? So that is the meaning of GDP. But you have to be very careful with some of the terms present in the definition here. Let me tell you why. When we say final goods and services, we are calculating the value of only the final products, okay? And we are not considering the value of intermediate goods in the total value of goods and services produced. Why? Because this intermediate cost will be already included in the final cost, right? So whenever we produce something, the final price of the product will include the cost of raw materials, okay? And it will also include the technology cost that we had to infer for producing the goods. It will also have labor cost, etc. So the final price of the product will be fixed by taking into account of all these elements. That is why if we add the value of intermediate goods, say for example, value of all tires produced, value of all windshields produced, then obviously you are counting twice, right? So in order to avoid that, while calculating GDP, we will take into account only the final value. And then moving on from here, what is mean by domestic territory? Gross domestic product means what are the goods and services India is producing within its domestic territory. Here we are not taking into consideration of the goods and services we produced abroad. Okay, so we are taking into consideration of only the goods and services produced within the domestic territory of India. So when I say domestic territory, it includes 4 things. First is the goods and services produced within the political boundary of the India. So how much amount of goods and services were produced? Okay, we will calculate the final value of all the goods and services produced within the domestic territory. Here, you have to remember that it doesn't matter whether Indian nationals produced it, Indian citizens produced it, or the foreign companies produced it. If it is produced within the political boundary of India, then that will be included in the GDP calculation. And second thing what you have to remember is the oil and gas rigs being operated by Indians abroad will also be included in the GDP calculation. Okay, so the output of or the production of these companies abroad will also be included in the GDP calculation. And the aircrafts and ships operated by India and the income earned through these services will again be included in the GDP calculation. Okay, so even the Indian embassies which are present in the other countries will be considered as the domestic territory of India only. So if we have our embassy in Tel Aviv, in that case the region which is given for Indian embassy will be considered as domestic territory. So whatever we produce from that region, be in terms of anything like services, that will be added to what? Added to the GDP of India. So this is all about domestic territory. And then what is mean by 1 year? Here we are taking into consideration of only the goods and services which are produced in last 1 year. Say for example, if you have bought any new home which was actually purchased by you in maybe some 5 years back, that cannot be added to the GDP calculation as the something happened in the last 1 year. Why? Because it was in the part of GDP calculated 5 years ago. So to be more precise, we will take care of only the goods and services added in last 1 year only. So this is all about the GDP. Now there is a similar term called as gross national product. So in the gross national product, we calculate the value of goods and services produced by only the nationals of the country. Okay, so in that case, we will not calculate the value of goods and services produced by the foreigners in India. So this is one thing which you have to remember. And second thing, while calculating GDP, we will take into account of the goods and services produced by the Indian nationals outside the domestic territory of India also. In GDP, we will strictly restrict the calculation to only the political boundary, but while calculating GDP, we will also take into account the goods and services produced by the nationals outside the Indian territory. But in that case, we will take only the goods and services produced by Indian nationals and not foreigners. So, how to calculate GNP from GDP? We can calculate GNP from GDP by, adding the income from abroad, that is, adding the income earned by production of goods and services by Indian nationals from abroad minus income sent abroad. This is something that is actually the value of goods and services produced in India by the foreigners. Okay, so after making this subtraction, you will be able to find out the value of GNP. So this difference of income from abroad minus income sent abroad is called as the net factor income. So if you are given GDP and asked to find GNP, how can you do? You can simply add the net factor income value. So this is the main difference between GDP and GNP. Moving on from here, so what the GDP does not include. So this is something which you have to be clear about. So GDP will not include financial transactions made in India in 1 year. It will not include the financial capital value, or it will not include the non-market or illegal activities. It is mainly because these kinds of transactions or capitals are not going to generate any goods and services, right? So financial transactions are not going to produce anything, and that is why these elements will not be included in the GDP. And then how GDP is calculated. There are three popular methods of calculating GDP, that is expenditure method, income method, and the product method. We will see how these methods work. First, let's take the expenditure method. So what is the meaning of GDP? It is the value of all goods and services. So what is the value of any particular good? Say for example, this pen, maybe if this is somewhere about 1500 rupees, then what I am talking about, the price of the product, right? Okay, so what is the value? It is the price. Okay, and if you have to calculate the value of all goods and services existing in the economy, you can simply calculate how much amount of expenditure has been made in the country. Say for example, if there are 10 people in the country and if I am spending 1500 for purchasing this, and similarly if the other people who are there along with me are also making expenditures for the purchase of goods and services produced in the country, then we can simply add the expenditures of each and every one so as to get the final value of goods and services. Why? Because the expenditure that I made for purchasing this particular product is equal to the value of this product, right? So in that case, in expenditure method, we can find GDP by adding the aggregate spending of consumers firms, government, and the foreign consumers in the domestic market. So this is the most popular method of calculating GDP. Okay, so here what we are going to do, we are going to add the consumption expenditure, that is expenditure made for consumption, expenditure made for investment, okay, expenditure made by the government for both consumption and investment, and the expenditure made for net exports. So what is mean by expenditure on net exports? If I am making a product in India and selling it to the Sri Lanka, then I will be able to earn for the product which I made in Sri Lanka, right? So that is something going to add to my GDP. But just imagine if I am getting a product or buying a product made by Sri Lanka, in that case I have to pay to it and I will not be able to add that expenditure to my GDP, okay? But rather what I can do, I can add the expenditures made by the Sri Lankan people for the purchase of the Indian goods. So doing this type of calculation by adding the income and subtracting the amount that we spent for the purchase of imported items, we will be able to find out the net exports expenditure. Okay, so in expenditure method, we are simply calculating all the values of expenditures we spent over the purchase of goods and services. It includes consumption expenditure, it includes investment expenditure. You are investing something and that investment is actually turning out into a useful good or services, and that is why we can add the investment expenditures also here, and the government can do both consumption expenditure and the investment expenditure. And we are also taking into account of the expenditure made for the Indian goods abroad. Okay, so after deducting the expenditure that we make for the foreign goods in India. So this is how you calculate the GDP in your expenditure method. And the second method is the income method. In income method, it is very easy, that we will simply add the aggregate income of all the sections of the economy. Okay, so here is the example. In income method, we calculate the wages and salaries. Okay, we calculate the rent, we calculate the interest payments, dividends, undistributed corporate profits, mixed incomes, direct taxes, indirect taxes, depreciation, net income from abroad, etc. It is why, because see, if you take an example of closed economy, okay, a simple economy model where the goods and services are getting produced and the goods and services are getting consumed. Okay, so if the firms are producing goods and services, they need the land, labor and capital for producing it. So it is going to be the households who are going to supply them land, labor and capital. So in return, what these firms will give to them, they will give for land, they will give rent, okay, for labor, they will give wages, okay, for capital, they will give profit. So this rent, wages and profit are going to be the income of these households. Okay, so the expenditure made by the firms for the production of goods and services is going to be the income of these households earned through lending their land, labor and capital. So if we are calculating GDP by expenditure, then we can also calculate GDP by calculating the total income earned by the economy. So this is about the income method. Okay, in product method, we will add the value of all goods and services produced in the economy. Fine. So now, what are the applications of GDP? GDP is something which can be used for tracking the growth year by year, identifying the rate of growth in business cycle, whether the Indian GDP or the production value is getting increased or decreased over a period of time. It is useful for measuring the effectiveness of government policy, whether we are able to, convert the whatever thing that the government is doing in terms of policy making is able to get reflected or not in terms of increased production, services, etc., and evaluate those policies in terms of accomplishments. And most importantly, we can use this to compare our growth with the rest of the world by simply comparing the GDPs of India with the rest of the world. So what are the components of GDP? It includes consumer spending, investment spending, government spending, and net exports. That is through expenditure method. I have an exciting announcement to make here. That is, you can use my code RIYA50 to get the UPSC CSE subscription for just 24,999, where you will be getting the plus course access to all these top educators classes, and that are going to be not only in English, you can also have access to your English batch, and you can also have access to your Hindi batch. Okay, so that's it for today. Thank you so much for watching. If you have any doubts, please drop a message in the comment section. If you like this video, please like, share, and comment. See you all in the next video. Bye bye.